Okay, so the global backdrop is going to be negative, but what are the micros telling us? Our research team is with us to list the top stocks that you should watch. Let me start with Anuj.
Well, Lata, my sense is if the market has to recover in the second half, then the banking stocks have to lead it. And in that, I think there's one trend which I'm noticing, and I can be wrong perhaps, that after 1 or 2 years of underperformance, HDFC Bank and Kotak Mahindra Bank both are showing some signs of bottoming out, whether it's selling exhaustion or something else. For HDFC Bank, it's a sign of a double bottom, and for Kotak Mahindra Bank as well, it's done practically nothing all through the last 12 months, and every time it comes to 1700, 1750, it normally takes support. So again, from the risk reward point of view, if the market has to show stability and bounce back, then perhaps banks will have to lead it.
Okay, Anuj, thanks very much for that. Bajaj Finance numbers in focus. Abhishek is joining in with a snapshot. Abhishek, morning.
Morning, Prashant. So the book has recovered in terms of asset quality back to pre-COVID levels. However, it's not a profitable growth in Q4. So the calculated net interest margin has declined by 95 basis points on a quarter-on-quarter basis, where gross NPA ratio is now at 1.6%, which is back to pre-COVID levels that we are used to seeing gross NPA at. Restructured book has also declined to 0.36% of the AUM versus 0.8 on a sequential basis. However, stage 2 or loans overdue more than 60 days remains stagnant on a quarter-on-quarter basis. So versus, NII was at 6,068 crore when compared to 4,659 crore in the same quarter last year, and PAT was at 2,420 crore when compared to a little under 1,350 crore in the same quarter last year. CLSA has a sell rating on Bajaj Finance. Target price has been reduced by 500 rupees per share to 6,000, and they have cut the EPS estimate anywhere between 8% to 9% for the next 2 years. Back to you.
Okay, Abhishek, thanks a lot for that. Well, one thing which stands out in this earnings season is also correction in valuations. The overvalued stocks are getting corrected. So Bajaj Finance is perhaps the most overvalued stock, so could play out like that. Let's go across to Rima then for news on Wipro. Rima, one acquisition by Wipro.
Wipro has made a large acquisition of $540 million. They will be acquiring a SAP consulting player called Rising, which had revenues of nearly $200 million in 2021. The consideration is $540 million that Wipro will be paying, which means the acquisition has been done at an EV to sales of 2.8x. This acquisition, according to analysts, could add about 120 to 150 basis points in terms of an inorganic contribution in FY23 as well as FY24. The rationale for the acquisition: it will advance the company's position as a SAP transformation player. It will also help them expand leadership in oil and gas, utilities, manufacturing, and consumer industries, and expand their local presence in Australia, Canada, Germany, and US. It's another very large acquisition coming out of Wipro.
Okay, thank you very much for that, Rima. And back to you, Abhishek, and back to results. AU Small Finance, you're happy with the numbers?
Well, Lata, lower tax rate has aided the profit this time around. The tax rate has come in at 11% when compared to 25% in the previous quarter. They have also lost out on CASA ratio, which has declined by 200 basis points on a sequential basis to 37%. Asset quality has improved in line with management guidance. It is now at 1.98 versus 2.6 in the previous quarter. Operating profit growth, now that's a surprise given the fact that it has grown only by 5.2% quarter on quarter versus a loan growth of 14.7% on a sequential basis. Both the NII and PAT are ahead of our poll. Back to you.
Abhishek, thank you very much for that. Reliance Industries has entered into an agreement. SONA is here with more. SONA.
Thanks a lot for that. Well, Reliance Industries and Aziz, they have signed the shareholder agreement which was announced back in June 2021. This is for revised chemicals project in which the JV will construct and operate a chloralkali, ethylene dichloride and polyvinyl chloride production facility, and the overall investment in this particular JV will be to the tune of $2 billion. So some more updates coming in for this JV.
Okay, got that. Thank you very much. Back to results again. Nupur, UBL numbers?
Well, for UBL, we already had an indicative revenue figure of around 1650 to 1700 crores from Henniken's Q1 release, and company did post the same. Revenues coming at little over 1700 crores. Gross margin saw a decline of 330 basis points to come at close to 49% due to raw material price inflation on expected lines, but overall operating performance was much ahead of street estimates. Margins coming at 15% versus estimates of 14%, in and posted 164 crores of profit. Volumes went up by 7% compared to last year, and realizations as well up 3.5%. Absolutely in line with estimates. Also, to mitigate cost pressures, the company is in process of securing price increases. Management con call is today at 2 p.m. so we'll get more details on demand as well as raw material price trends post that. All in all, better than expected operational performance coming in from UBL.
Okay, thanks Nupur for that. Let's go across to Sonal then on macro tech numbers, Lodha Developers that is. Sonal, how are the numbers?
Well, we already had the operational data, Anuj, and that looked really strong. This time around, the company has given us details as far as this P&L and guidance is concerned. The P&L looked good. Profits went up by 2 times to come in at 573 crore rupees. The guidance is really strong. They are expecting pre-sales of 11,500 crore rupees in FY23, which is a growth of 27% on a YOY basis. Operating cash flows more than 6,000 crore rupees. They plan to reduce debt by over 3,000 crore rupees in FY23, lower than 6,000 crore rupees, and they also expect 1,500 crores plus surplus from their UK projects. So FY23 is looking good as well. Expect a green tick on the stock.
Sonal, thanks very much for that. SCHAffler fourth quarter numbers look strong. Agam has more. Agam.
Well, a very strong quarter, in fact, considering we are looking at a 19% growth in its revenues, a 350 basis points improvement in its EBITDA margins coming in at around 19.7%. Consequently, profit rose as much as 48% on a year-on-year basis. It is the automotive aftermarkets along with the industrial segments which has driven growth, but we've also seen a surge in exports which has led margins higher, besides the operating leverage which has also played in favor of SCHAffler India.
Okay, that's good to hear. And a bunch of more results. Abhishek, finance numbers.
Well, Lata, some mutual funds on my radar, given the fact that all of them have shown sequential weakness in terms of their revenue. So, UTI AMC, the revenue is down 2.5% quarter-on-quarter. The profits are down 57.5% quarter-on-quarter, and they have also seen a decline in their income yield. AB Sun Life AMC, the revenue is down 3.2% quarter-on-quarter. Profits down more than 15% sequentially. The revenue to AUM ratio, that is the income yield, almost stagnant on a sequential basis, and they have paid a final dividend of 5.85 per share. Nippon India AMC, that's the outstanding versus the other two. Revenue down only 0.2% sequentially. PAT is up 0.5% quarter-on-quarter. The income yield has remained stagnant, and they have also paid a final dividend of 7.5 per share, which means about 96% of the standalone profits have been paid out as dividend. Back to you.
Okay, thank you very much, Abhishek. That was a bunch of mutual fund numbers. Let me quickly recap all the top stocks. The positive news flow are Wipro, Reliance, United Breweries, Macrotech and SCHAffler, while stocks with negative news flow could be Bajaj Finance, AU Small Finance Bank. Really, I thought AU Finance was good. UTI AMC, Aditya Birla Sun Life and Nippon India AMC. With that, let's go over to Manisha Gupta for the commodity cues. Manisha, mixed cues, is it?
Absolutely. Well, yes, Lata. But 3 things to watch out for the trading day today is 1, the US dollar at above 102. Second is China pledging to increase support for the economy. So we are looking at more stimulus coming in from there. And third is Russia wanting to halt gas deliveries to Poland and Bulgaria. So these are the 3 factors that the markets will move on. When it comes to energy, well, we have seen a rebound here, 3% up overnight for the crude prices, and the natural gas rebounded by 17% for the European markets there. Well, there would be an eye on what Russia really does next. Russia has called for unfriendly countries to pay for gas in rubles, and 55% of Poland gas imports actually come in from Russia. So there is that scare yet again coming in about lower supplies, and that is supportive for the crude oil prices. But the industrial metals, well, they have gained ground overnight on China's stimulus hopes, but the fact that there is strength in US dollar, there is demand concerns as well, and that seems to be limiting gains. So trading on the lower side of the range, but with a bit of positive bias for metals.
Manisha, thanks a lot for that update. We'll find out how the markets move. Just look at what the SGX Nifty is doing. Actually, it's well off the lows of the morning, 150 points off the lows. This is one of my another angst that I talk about. I think it's time when we have at least index futures trading should be available since morning, because so much changes between 7 a.m. to 9 a.m. This morning the SGX Nifty was down actually 300 points, 300 plus. And it's now down to about 177 points. So there's some intraday recovery.
Actually, the US early indications are that there will be some green. So after the big fall, the US futures indexes, all of them, NASDAQ and S&P 500 in particular, are showing a little bit of green, and that perhaps is pulling up the Asian indexes as well. But